Fine. So it was about 200 points. So it has made a correction about 79 points, close to about since morning. Now, there's just why I've shown you this thing is that, you must remember that there are some timings which are very crucial for the market. So, like between 3 and 3:30. At 3:30, the market closes. At 9:15, the market opens. 9 o'clock is the pre-open. So, 9:15, the market starts trading. People can, punch their orders at 9, but the actual transactions will affect it only by 9:15, and the market will close at 3:30. So between 3 to 3:30, it's said that all the professionals, like the mutual funds managers, or people who are buying, they enter in the market between 3 to 3:30. So it's a right time to take positions when the professionals do. Between 9:15 or 9 to 10, it's basically all the retail participators or very less professionals. They join the party at between 9 to 10. People now, they know that the GST is going to be has been reduced. So people are very gung ho upon the market, and they will just do their transactions right in the morning. So those people who are not so mature, they enter the market between 9 to 10. Okay. But then the market corrects a bit during the day, and then the market takes a real position between 3 to 3:30. So the market may go up more than what it is, more than 200 points even. Okay. It will depend upon how the professionals, they think about the market. Okay. So normally one should refrain from buying or taking positions between 9 to 10 in the morning. So 9 out of 10 times you will always, not like your decision if you have bought the shares between 9 to 10. Okay. So it is 3 to 3:30 when the professionals enter into the arena. You should be taking your position only at that time. So this is just a kind of a understanding. Okay. So now, we can just start with our project, our, case study. So, Yashika, are you there?
Yes, sir.
So, Yashika, tell me at what time you should buy the stocks, between 3 to 3:30, or you want to buy or sell, or between 9 to 10?
I guess, sir, 3 to 3:30.
Why? Because all the professional people, they do, I mean, take positions between 3 to 3:30, who are knowledgeable, who are, bulk buyers, who are mutual funds, fund managers, or analysts. They do the
Mm-hmm.
trading mostly between 3 to 3:30 at the last half an hour. Okay. So you should
Okay,
also sync with your positions at that time rather than taking very early positions. Okay.
got it.
Okay. Now, case study. So, I'm just going to make it this way. Okay. To value the Zen, just read this case study again.
Okay, sir. So, valuing Zentech Corporation using precedent transaction analysis. You're a financial analyst at a boutique investment bank. Your firm is advising a client interested in acquiring Zentech Corp, a mid-sized software company generating consistent EBITDA margins and revenue growth. To value Zentech, you are asked to perform a precedent transaction analysis using the following historical M&A data from comparable companies in the same industry.
Okay. Just
Should I?
hold on. Just hold on. Now, so you are basically a company called Zentech. No. So you're going to value a Zentech corporation. Okay. So you are basically a financial analyst in a company called Boutique Investment Bank. So your firm is advising a client who is interested to buy Zentech Corporation because this company wants to grow its position, increase their footfall and their market share. So they want to buy a mid-sized software company, okay, which is generating profit up to the level of EBITDA, okay, generating consistent EBITDA margins and revenue growth. So this company is growing and also profitable, at least at the level of EBITDA. Okay. So to value Zentech, you are asked to perform this precedent transaction analysis using the historical M&A data from the comparable companies in the same industry. So you found that there were companies which are there in the market. One is called the now. Can you read this company name?
Alpha Soft.
So it's AlphaSoft, and just name all the three companies.
Okay, so Alpha Soft, Betterware, and Gamma Cloud.
So these are the three companies, and they acquired EV. That means at what was the enterprise value at they were acquired? These are the companies which were bought over in the last few months. So what was the enterprise value of AlphaSoft,
$600 million.
and what was the enterprise value of Betaware?
$750 million, and for Gamma Cloud it was $500 million.
So the enterprise value means what?
It is basically whatever your market cap is, then you add debt to it, and then minus all the cash and cash equivalent. So
Okay,
you
yeah,
include
absolutely.
all the operating assets.
Sure, sure. Very good. So it is basically the value of the shares in the market, that is the market cap, plus the debt, okay, minus the cash, okay. So acquired enterprise value was 600 crores, okay, or we say $600 million, okay. And what was the revenue of Alpha Soft and Betaware and
One
Gamma Cloud?
$150 million.
Okay, so 150, 170, and 130. So tell me, which company was acquired at the costliest price? AlphaSoft, Betaware, or Gamma Cloud? Which company was costliest? I mean, which was acquired in the last couple of months? Was it Beta, was it Alpha, or was it Gamma?
It was Betaware.
Betaware was the most costliest because it was acquired by someone by paying 750 as an enterprise value. Okay.
But
Why?
since the revenue and EBITDA was also high, so it
EBITDA was
balanced.
also okay. So we have just come to that. So revenue was 150, 170, and 130. So if you look at beta was, the enterprise value the highest, because if you look at the revenue as well as the EBITDA, so it was, generating more EBITDA as well as revenue compared to other companies. So the Gamma was the cheapest because its revenue was also less and its EBITDA was also less. Okay. Is that okay?
Yeah, yes, sir.
Okay. Now, let's go further down. No, Zentek has the following financials. Read this.
The revenue is $160 million and EBITDA is $48 million. Should I read the below part as well?
Okay. So now what is required? Just read the required column.
Okay, sir.
Sorry, sorry,
So
sorry. It is. So,
calculate the EV by revenue and EV by EBITDA multiples for each precedent transaction. Then compute the mean and median multiples. After that, estimate Zentech's enterprise value using the mean multiples. Then comment briefly on potential adjustments or limitations of this approach.
okay. So that means this is our requirement. In your exam also, I'll be giving such kind of questions. Okay. Calculate EV by revenue, EV by EBITDA, multiples for each of the precedent transaction. Compute the mean and median multiples. Estimate Zentech's enterprise value, and this is basically the target company, the Zentech value and mean multiples, using the mean multiple. So we have to calculate what should be the enterprise value of Zentech, considering the mean multiples. So that this means we are trying to value the Zentech. So that is our job basically, because this company wants to buy Zentech. Okay. So he wants to know what should be the enterprise value of this company by using the mean multiples of the comparable companies. Comment briefly on the potential adjustment or limitations of this approach. So once you have calculated the enterprise value, so you have to comment on that. So first is solution, calculate the multiples. Okay. So just see the multiples. Read this multiple EV upon revenue. Just read this.
So for AlphaSoft, 600 by 150, that would be 4x, and Betterware 750 by 170, 4.41x. Then Gamma Cloud, it would be 500 by 130, 3.85x.
Okay. So we have calculated EV by revenue. Okay. How many times then revenue the companies are trading. Suppose, the revenue was 150, enterprise value is 600. So that means Ultrasoft is trading 4 times, more compared to its turnover. Okay. Whereas Betafare, where is trading 4.4 times of the enterprise value. And Gamma is trading 3.85x compared to its revenue. Now tell me, which is the cheapest company? Anyone?
Karma Cloud.
Gamma is the cheapest because it is trading at 3.8 times than its revenue. Okay. So when you are going to buy a company, you would find out, suppose the company is doing certain amount of revenue, but it is costing you something. Okay. So you want to just compare how many times it is quoting above its revenue. So, so Gamma is the cheapest company because it is selling at 3.85 times than its revenue. Whereas which is the costliest company, Yashika?
Betaware.
Excuse me,
Beta.
sir.
Okay. Fine. No, no, I would like, somebody else to answer, like Abhishek or Shruti or,
Sir, I have a question.
yeah,
Sir, by looking at EBY revenue, which is 3.85, and we can say that the Gamma Cloud is the cheapest company.
yeah,
But by looking at EBY EBITDA, the Gamma Cloud has a 14.29
yeah,
EBY EBITDA.
yeah.
So how can we say that it is the cheapest company?
No, we have, what we are trying to do is that we are looking at, every respect of valuation. Now, first we are use the EV upon revenue to find the cheapest. Okay, because
Yes.
no one matrix can give you a very clear picture about the company. Okay, as you clearly said, but if you look at EV upon EBITDA, you find actually it was not the gamma, it was alpha, which was the cheapest and not the gamma. Okay, because each multiple will give you something different. Okay,
Right,
now
sir.
now you have to basically, that's why it's not a very easy game to find the correct price of a company by looking at various multiples. Okay. Now, what we do is generally we make the average of all these multiples to find a value. Now, some company may be trading at a low multiple compared to its revenue, but compared to EBITDA, it may be at the costliest. So the correct answer would be just to take an average valuation of all these multiples. Or if you think the revenue is the right multiple, then you should go with the revenue. But if you think that EBITDA is a much better, way to explain the valuation because it is taking care of the profit of the company. Now, revenue is not talking about the profit. Okay. Some people may argue that the revenue is not the correct multiple when you have to compare EV upon revenue and EV upon EBITDA. So EV upon EBITDA is a much better multiple because how much profitable the
Yes, sir.
company is. That should influence the valuation of the company and not the revenue. Okay, fine. So
Yes.
it all depends, and if you have some kind of a confusion or some kind of a thought that no, the revenue can be also a good one. So then take the revenue and EBITDA multiples and take the average of it and believe in that. Okay, because no one multiple will give you the right number all the time. So who asked this question?
Sir Abhishek.
Abhishek, that's a very valid question what you asked because we have to look into all these multiples and I mean then apply our mind basically. Okay, so we look into the final answer before making a judgment. Then what we
Oh,
do is that we find Abhishek, please be on line. Just read mean and median multiples. Read this.
sir, mean and median multiples. EVY revenue, mean is 4.09 and median is 4.
Okay.
And for EVY EBITDA, mean is 13.75 and median is 13.64.
Now tell me one thing. Which of the thing is better? Is it mean or median? What kind of statistical measure we should use while valuing the company? Should we take the
It
mean?
is median because median divides the data into two parts.
Because the mean can distort the numbers, okay?
Yes, sir.
Because of the outliers, whereas the median gives you a much better handle. Okay, fine. Now estimate that Zentex enterprise value. Just find out this. Read the third one.
Okay, sir. So using mean EVY revenue, uh, which is
4.09.
6.
So what he has done is that he has used the mean actually. Okay. Since he has used the mean, though the median was 4, but anyway, it's, I mean, similarly for the mean was 13.75 in case of, the EV EBITDA. So this guy has, I mean, the case study where used the mean and not the median, but rather it should have, should use the median. But let's see
Median.
what happens further. Okay.
So what is 160 here?
What is?
160. Oh, it's multiplying 4.09 into 160.
160 is the revenue of, I believe 160 is the revenue of the Zentech. Okay, let's just go and see the Zentech revenue. So Zentech's revenue is how much? 160. Okay,
Yes.
and
Okay.
EBITDA is 48. So now we are using the Zentech's revenue EBITDA to calculate the valuation of this company. Okay, so if EV enterprise value EV upon EV is 4.09, which is the average. But I told you that it should be actually the median which should have been used. Okay, but anyway, we'll stay with the mean because the numbers are very small and they are all closely, close to each other. So even the mean can be reliable here. Okay, when the data is very large, the median is always a better one. But when the data is small, you can even rely on mean also. So this guy in the case study has relied on mean. So EV would be 4.09 into 160. So the valuation comes to 654 million.
Yes, sir.
Can you read Abhishek further?
Uh, Sir, using mean EV by EBITDA 13.75, the valuation comes to 660 million.
Okay. Now,
And
the valuation range. Just read this.
valuation range based on revenue 1654.4 million, and based on EBITDA it is 660 million.
Okay. Find the estimate. Read it.
Final estimate average of both, which is 657.2 million.
Okay. So that means, what he has done is he has used both the EV upon, revenue as well as EV upon EBITDA. He arrived at a certain valuation, which was not very far away because, EV upon revenue was 654 million and EV upon EBITDA was 660. So we almost got the same time of a valuation for this company. And then, we took the range was this, between 654 to 660. Then we found out the average. He would say on an average, this company should cost $657 million. Okay, fine. So the guy who's want to acquire, he wants to buy this company. He should know that he has to pay close to about 657.2 million. When he goes and sits on the table with the company, with this company, and they are going to negotiate. So this would be the ideal valuation based on the historical transaction analysis or the precedential analysis which has happened. Okay. Abhishek, can you read this commentary?
Uh, Market timing. Historical deals may not reflect current market condition or investor sentiment. Synergies, if acquiring paid premium for synergies, Gentech's standalone value may be overstated. Growth rate, difference in the revenue by EBITDA growth between Gentech and peer should be considered, and control premium multiples reflect control value, not one majority interest.
Okay. So commentary on adjustment, market timing. Now the market timings are very important. Maybe the above deals which have been given to you, the three deals, they might have happened, not very recently. They were little older ones. So they may not be, they may not reflect the current market conditions because I told you that all these multiples go over a change over the time. In a bullish phase, these multiples look very high. In the time when the market corrects and is passing through a recession or a correction, these very multiples, they contract. Okay. Fine. So you must see whether the time at which these multiples were calculated, I mean, on the basis of precedent analysis, the same kind of a market conditions are existing at that time when you're buying this company. If yes, then the valuation is right. Otherwise, you have to make some adjustments. Okay. Then synergies. If the acquirer paid premium for synergies. Now, what happened was that these three companies which we have mentioned, they were bought by some people. Okay, they had paid some premiums. Okay, So, because there were some synergy benefits which are available on the earlier transaction, which may not be available, because of the Zentek doesn't have any kind of a, because Zentek is because what we have done is a standalone valuation. Okay, so they may be overstated, because these valuation multiples have been calculated on the basis of certain synergies which existed at that time of these transactions. Okay, between the acquirer and the target. Now, that means those synergies have been already inbuilt into our valuation when we are valuing Zentek. So, and these synergies may not be present when you buy Zentek. So, in that case, Zentek will be overstated. Have you got my point? अभिषेक, याशिका, जो मैंने अभी बताया है वो क्या समझ में आया आपको? नहीं, मैं आपको एक बार दोबारा बताता हूँ। क्या था, जो हमने कंपनीज की पहले ट्रांजैक्शंस देखी, उस ट्रांजैक्शंस में अगर सपोज while buying those companies, some synergy premium was being paid. Okay, because there was some kind of a synergy benefit which was coming to the acquirer at that time. Maybe those synergies are not present now. I mean, between the Zentek and the acquirer. So while we are doing the Zentek valuation, we have already inbuilt those synergies, because the present analysis is already building them. So you have built those synergies also in this new transaction of Zentek valuation. So in that case, Zentek will be slightly overvalued because of the synergy benefits which have been already inbuilt into our valuation of Zentek. Have you got it, Yashika? If students have got it, so
Yes, sir.
so please raise your say yes on the chat box. Yes, we understand. Okay. Then I'll again explain next time again. So if you have not understood, so please say that I have not understood. If you have understood, say yes, I have understood this synergy one. Okay. So say that on the chat box. Okay. Fine. Then we come to growth rates. Differences in revenue, EBITDA growth between Zentek and peers should be considered. Okay. Difference in revenue, EBITDA growth between Zentek and peers should be considered. Now, we all know that, when we buy something, we always look at the future growth of these companies. Like Zentex, what is the future of Zentex? Okay. Fine. So we must also consider that in mind while valuing Zentek. If the Zentek is not going to grow so much as it has grown in past, so the valuation should be actually, brought down a little bit, because the future doesn't seems to be much bright for Zentek. If you buy now, suppose if I'm going to buy a land, if the future is not very good, people are not going to make houses in that particular area. So why should I pay a higher price which has been paid in past? Because that time people thought that there'll be a lot of growth happening here, a lot of people will be coming in those areas and they will be buying land. So, but now companies also, because if the companies are not going to grow, so why should I pay a premium which others have paid? Then the control premium. Multiples reflect control value and not minority interest. Okay, so it should be minority interest. So control premiums, multiples reflect control value. Now, all these multiples, they reflect, the control premium, because when you are going to acquire the major stake in Zentek, okay. Similarly, in the past transactions also, these companies were bought at, taking for the purpose of taking the control of those companies. So the acquirer might have paid some control premium, values higher than what were prevailing on the stock exchange, because the promoters would sell these shares only at a higher price compared to what price it was prevailing on the stock exchange, because somebody who acquired these shares from the promoter, he will become now the owner of the company, and the existing promoter has to walk out of the management. Okay, because he may not be controlling now the company, and new promoters or new buyers will own the position of dominance, and they are going to run the company. So for that, there is some control premium which is paid by the acquirer to the existing majority shareholders. Okay, fine, and not the minority. So there would be, some minor shareholders, so they may not get that a control premium. So anyway, we'll talk about that a little bit more we'll ponder on that and just see what does it mean. Okay. So fine. So that's all. I mean, for the day, and I'm just going to lock it.